Welcome, dear traders. You are watching a recap of the Asian session on June 5. The US debt ceiling saga ended at the end of the last week. Joe Biden signed the bill into law, hence the US government managed to avoid a default, and market sentiment improved immediately. This week will not be as busy as the previous one. Besides, Fed policymakers will not provide any new comments as the blackout period has started. The Fed meeting will be held on June 14. Taking into account the earlier statements about the further plans for monetary policy, analysts expect the regulator to take a pause. As the FEDWATCH tool showed on a Monday morning, more than 79% factored in such a scenario. Like many other economic reports, NonFarm Payrolls data turned out to be mixed. The economy added 339,000 new jobs in May, and this is a strong figure. However, the unemployment rate also increased to 3.7%. Its widely expected average hourly wages declined. Given the tight labor market, there are two scenarios: a pause in monetary tightening or a rate hike by a quarter point in June. Moreover, a new rate increase may be a one-time move rather than an extension of the tightening cycle. Conversely, a decision to keep rates at the same level should not be seen as the end of the cycle. As Jerome Powell warned a month ago, the central bank would make rate decisions based on incoming data. The US dollar rose following a mixed NonFarm Payrolls report last Friday. However, as seen on the chart, it grew rather moderately and consolidated in a fairly narrow range of 104.00 and 104.20. After the volatility triggered by default fears and the comments of Fed policymakers, many currencies started the new week with small changes. Nevertheless, demand for the US dollar kept rising. In the Asian session, the greenback hit an intraday high of 104.30. The yield of US Treasury notes also climbed in the morning. For example, the one-year government bonds went up sharply this morning, trading near a 23-year high of 5.3%. The dollar-yen pair jumped as well. Growing US government bonds as well as upbeat NonFarm Payrolls report increased the likelihood of a new rate increase. It facilitated the upside potential of the US currency. All these factors triggered the sell-off of the pair. It slid into the range of 139.90 and 140.5. In the Asian session, the dollar-yen pair broke above the resistance level of 140, touching 140.40. A breakout of 140.40 could push the pair to the resistance level of 140.90, which is the high of May 30. It may even climb to the semi-annual high of 141.60. Given the economic reports on Japan's economy published today, the yen will hardly recover in the near future. The Jibun Bank Services PMI index for May came out slightly below the forecasts. The reading amounted to 55.9 points versus the consensus estimate of 56.3. However, the composite PMI index, which measures the output in the manufacturing and services sectors, rose in May at the fastest pace since October 2013. The indicator stood at 54.3. Strong economic data enabled the Bank of Japan to stick to an ultra-loose stance, so the yen is likely to remain weak against the US dollar. Commodity currencies declined at the start of the week, and the Australian dollar kicked off Monday with a fall in the price corridor of 0.6587 and 0.6618. Compared to the moderate consolidation of the US dollar, the Aussie is very volatile today. Strong bullish sentiment on the greenback exerts pressure on the Aussie. However, growing optimism in the stock markets and rising oil prices are pushing it up as a risk asset and a commodity currency. In addition, the Reserve Bank of Australia will announce its rate decision tomorrow, and this is the main reason why the Australian dollar is so volatile today. Consumer prices in Australia have been rising for the 9th month in a row and remain at a 30-year high. At the same time, the annual inflation totaled 7% in the first quarter of 2023, and the monthly figure amounted to 6%, so inflation is still far from the 2 and 3% target. Reserve Bank of Australia Governor Philip Lowe said that the regulator still has work to do. Perhaps he hinted at a hawkish move at the upcoming meeting. In March, the regulator raised the key rate by a quarter point, and in April it took a pause. If the Aussie still has a chance to advance, depending on the Reserve Bank of Australia's decision, the New Zealand dollar is not so lucky in this regard. The central bank has hiked the interest rate 12 times in a row since October 2021 and seems ready to take a pause at its meeting a week later on June 12. Therefore, the Kiwi started the week with a drop due to external factors. It was trading at 0.6053. In the Asian session, the Kiwi dollar pair was moving in the range of 0.6043 and 0.6083. And that's all for now. Hit the subscribe button and keep close tabs on the market developments with us. And see you soon.